Bitcoin entered the weekend near $64,000, and the latest US spot ETF data finally flipped back to a net inflow. But that does not yet prove Wall Street demand has returned. It only shows the institutional bid reappeared for one session. The key question is whether that demand can persist when ETF trading resumes on Monday. Until then, this is a recovery with evidence, but not full confirmation. At the production cutoff, Bitcoin was trading around $64,100 after recovering from the $60,000 area earlier in the cycle. US spot Bitcoin ETFs recorded about $90.4 million of net inflows on Friday, reversing roughly $95.3 million of net outflows on Thursday. That one-day reversal matters because it interrupts the recent inconsistency in institutional demand. It also creates the hidden contradiction. Price has stabilized, but the flow trend is still too uneven to call durable. ETF flows matter because they are one of the cleanest bridges between Bitcoin and traditional US capital. A positive session can support the narrative, but persistent demand requires more than a single green print, especially when the cash market is closed for the weekend. Saturday and Sunday price action will mostly reflect crypto-native liquidity, derivatives positioning, and global trading, rather than new US ETF creations. That means weekend strength can be encouraging, but Monday's flow data is the stronger Wall Street confirmation test. If Bitcoin strengthens through the weekend, the move becomes more credible only if Monday brings another positive ETF session instead of an immediate reversal. If Bitcoin weakens, that would suggest Friday's inflow was not enough to stabilize demand, although one weekend decline would not prove the broader recovery has failed. If price stays flat or choppy, the market is effectively waiting for the next institutional signal. The strongest counterargument is that ETF flows are only one input, but the recent flow volatility makes them unusually important right now. Confirmation would be a combination of Bitcoin holding the recovery zone and US spot ETFs producing repeated net inflows when markets reopen. The thesis weakens if the weekend loses the recovery quickly, and it is invalidated more clearly if Monday returns to meaningful outflows while price also breaks down. The next watch list is simple: weekend price stability, derivatives stress, and the first complete ETF flow print of the new week. The headline is Bitcoin's rebound, but the message underneath is whether real demand can stay.